Okay, everybody, here we go. It's me, Gregory Mannarino. It is Thursday, March 9th, 2023. Let's start off with the economic news. This was widely anticipated by the market. I'm talking about these jobless claims. So this morning we found out that first-time claims for unemployment last week came in higher than expected. Okay, lovely. 211,000. With regard to continuing claims, also higher than expected. Did you watch the market futures respond to this? We were negative pretty deeply earlier. Then all of a sudden we find out that more people are losing their jobs. More people are staying out of work longer, and stock futures turn higher. Does that make any sense to you? Of course it does in this environment here. As we all know, I mean, it's to me, I don't know why there's no accountability. I guess I do. But when you hear a Fed president, two Fed presidents, Fed President Neil Kashkari, and I believe it was Mary Daly, I could be wrong on this, when they come out and say that in order for inflation to come down, people need to lose their jobs, and then you have the Fed chair, Yellowstone, appear before a Senate committee when he's asked the same question, then he kind of skirts around it and he gets all, no, well, we're not really trying to make people lose their jobs. Nonsense. And again, look, it's just out of control right now, and it's disgusting to me, and I couldn't even watch it yesterday. All the rear end kissing, the thank you, sirs, your service, your blah, blah, blah. Anyway, that's just the way it is. So on the back of that, okay, the MMRI did come up. We are now over 260, 260.6 last time I looked at it here. Stock futures did go green. Let's see if we last with it. 260 MMRI. It's going to be an interesting day. Is this number going higher? Is this number going lower? I guess we're going to see how that plays out here. U.S. 10-year yield roughly the same as yesterday. 3.98 relative strength of the dollar did come down substantially this morning. Actually, last time I looked at it, it was down 0.4%. If that were higher, well, the MMRI would be a lot higher. The risk in this market would be higher. Crude oil is catching a bid this morning. Gold and silver catching a bid this morning. Crypto's under some pressure a little bit. XRP catching a bid again this morning. And pretty much that's where we stand with this whole thing here. But look, we could sit here and we could talk about nonsensical data that they fish feed all of us and whatever else. The fact of the matter is, how do I explain this to you another way? It's over, okay? The economy is dead. It's been dead. It's been on life support since the last meltdown here. And the heroin that has been pumped into it in the form of vastly expanding debt, it's just, that's it. That's where we're at. And this mechanism, people, is not ever going to stop until that time when it does. And then we will get the implosion in the debt market that you and I realize is going to happen. There's no other way to look at this, people, honestly, that understanding that you and I, unfortunately, are living in an environment that without the relentless acquisition of debt, via any mechanism they can come up with here, and off the Richter scale spending that plays right into it. They must spend, okay, this tremendous Pentagon weapons, whatever they want to do here, almost $1 trillion here, to expand the war machine, which every other nation in the world is doing right now, getting geared up for World War III, which has already begun, in my opinion, here. And every other thing you could think about, it's all the same mechanism. It's all the same mechanism. Where does this cash come from? Okay, let's just talk about this Pentagon thing. It's like 800 and something billion dollars, 840, whatever it might be, and it's probably going to be higher than that. Where does it come from? We don't have it. Oh, but the Fed's balance sheet is shrinking, isn't it? You can tell by looking at it. Of course, this is all the off-balance sheet stuff you're not allowed to see. Could you only imagine what's really on that? I think about it all the time. What is on the Federal Reserve's second balance sheet? Most corporations, in fact, all large corporations have two balance sheets. They have the public balance sheet, that one that you're allowed to see, and the one that no one's allowed to see, except if you're really, really high up in the hierarchy of that corporation, or in this case, the corporation of the Federal Reserve, which is a for-profit institution. The Federal Reserve is a for-profit institution. Oh yeah, absolutely. Just like all of these major banks, IMF, for-profit. That's where the World Bank, for-profit. Okay, people aren't supposed to know that, but that's the case here. In the case of the World Bank, they have shareholders. Who do you think? Whose interest do you think the World Bank has in mind? Yours or their shareholders? Okay. I don't even, and I could be wrong on this, but I don't believe that the shareholders in the World Bank are, you're allowed to know who they are, which is kind of an interesting phenomenon if you ask me here. Anyway, with this whole thing, look, right now, as I said, stock futures are higher. Trading doesn't start for about 36 minutes from the time I am doing this. With the MMRI where it is, 260, and then let's talk about this yield curve. We have a big problem here, okay? This inversion between the 2 and the 10-year is extreme. And, you know, it's a glaring sign. And again, please don't take my word for this. I want you to look this stuff up, okay? When you have an inversion like this between the 2 and the 10, invariably, I mean, without exception, this points towards a very bad situation for the economy. We already are in a very bad situation for the economy. I think you all know that. But again, they're going to tell us how great we're doing. What they do is they try to pick an authority figure, whoever it might be, some freak, to tell you, to dictate to you your life. So it's what they're saying is going on, not what you're seeing or feeling. Understand? They try to confuse you in that manner. Hold on a minute. Well, this person is an authority figure, so they must be right. Janet Yellen, do you remember that whole thing when they floated her out? We got an inflation report proving that inflation continues to rise. It was never transitory. It was never temporary. It never peaked. It's continuing to rise, but they floated it out because she's the U.S. Treasury Secretary, former Fed chair, and she's going to tell you that prices are coming down. That's going to be the next, I think, real wave of propaganda. Is going to tell you prices are coming down. They're coming down. Prices are coming down. Don't worry, they're coming down. And you're going to go to the store, you're going to see prices are going up. So it's a way to keep you like off balance. That's what they always do. And it's always a deception. It's a distraction. I mean, that was one of my big themes for this year. A couple of things going on here. The deceptions, the distractions, the volatility in this market. Again, I spoke about this March when I explained how March generally plays out. It's not a great month for this market here. When we cross 250 with the MMRI, look what this market has done. It's basically gotten hit. I mean, out of the last 14 days, I think we had 3 positive days for the S&P 500. This is not going to stop, okay? As long as the MMRI remains where it is and the debt market itself remains unstable. Let me just say this too. Let's say, for example, you were to go look at the MMRI, again, free to you, free to everybody, link in the description of this video, and you see it at 260 or so. If the MMRI could stabilize, could stay there without any crazy gyrations, the market would adjust. But being that we're seeing this incredible volatility here in the MMRI, which is a reflection of risk in the market, you're going to still see this stock market reflect that volatility. For a trader, for someone that's in this market, someone like myself here, this is beautiful. It's nice to see. You want to see this kind of movement here in the market. That's how you make money. But for everybody else, it isn't really too good. Anyway, with that said, that's where we stand here, people. But again, what does this mean for you and me? From a realistic standpoint, we're not going to deviate. We're not changing from what we're doing. Okay? We're going to maintain our pathway to betting against the debt, becoming our own central bank, holding hard assets, understanding that the debt bubble is going to get a lot larger. It must, by design, get a lot larger. Central banks aren't shrinking anything. You heard Yellowstone Powell yesterday talking to the Senate committee. Oh, the Fed's balance sheet, it's shrinking, going out of his way to say that the Federal Reserve's balance sheet is shrinking. The Federal Reserve's balance sheet is not shrinking. The public balance sheet is shrinking. You can go look at it yourself. Go to the Federal Reserve's website. But what they're doing off balance sheet is ballooning. Again, the Federal Reserve, any central bank, first of all, its power resides in one thing. That is its ability to inflate. You're not allowed to know that. I guess our senators don't know that. Of course they do. You see, these people are not stupid. They didn't get into those positions by being really dumb for the most part. All right? They understand what's going on, and they're willing to play the game. They're willing to play the game. That's why these people are put into the places where they're at. Period. I think that's pretty evident. At least it should be. I hope so. All right, anyway, look, people, I'm going to let you go here. I covered a bunch of stuff with you today. Please comment. Let me know what you think about these things as usual. And I'm going to see you later for my live stream. And I'm actually looking forward to that. I know a lot of people don't like it. A lot of people do like it. I'm going to keep it going. I'll see you at 1:05 p.m. Pacific Standard Time for my live stream. And, well, that's all.